The G20 summit was quite a big meeting, but we have a bigger one right now. Jonathan, Corpina, and I on the floor on Tuesday to talk it all. Jonathan, thank you so much for coming on the show today.
Thanks for having me back again. Happy December.
Thank you. Happy December, Rabbit. Now, Jonathan, it looks like we're having a mixed reaction today. What do you think about this U.S.-China trade truce?
I think the market has a little bit of a hangover from the G20. We were so focused on that, what was going to be said, what was going to come out of it, what the market reactions were going to be. Clearly, we saw that yesterday coming in. The S&P futures were up 50 handles overnight on Sunday. Market was able to hold in there a little bit. We did start to sell off, and luckily we did continue to close in the green. But the way our trading activity worked out yesterday, you kind of felt that there was some sell pressure that was going to come into the market today. So no real reason why we're down 20 handles in the S&P at this point. I just think it's more of the volatility that we've seen for the last 6 weeks.
And Jonathan, you got a tremendous feedback from our viewers last week, speaking for the long-term investors out there. Now, just last week, growth stocks and value stocks were trading neck and neck, and now it seems like we're favoring growth stocks again. Do you agree with this logic?
It's very cyclical, and our cycles have become from a long-term cycle to a very short-term cycle. Growth stocks are clearly a place where I think people feel much more comfortable. When we start to talk about tariffs, then you start throwing technology stocks into there, and that whole mix. So for a long-term outlook, I think growth is really where you want to be. Looking at some of those higher dividend stocks, especially, that'll help with some of the volatility that we've seen in many of these stock prices.
Growth just sounds more promising too,
Absolutely, and people feel much more comfortable with that. But when you're looking at the market and looking at all these headlines, we talked about this last week and the week before. There's so many different factors that are out there, right? Interest rates. What's the Fed going to say? What's the president going to say? China, tariffs, oil. So all these different areas out there have really forced investors to kind of pull back and take a pause. So not a long trading month we have in December, right? We have a holiday, a national memorial tomorrow, so no trading for tomorrow. That gets us down to 19 trading sessions in December. Once we get past December 21st, the rest of the month is really going to be a non-event. So we're going to have a lot of activity really capped into a very small period of time. I think that can add a lot of volatility to our market. But overall, I think we're going to start to continue this upward trend. Got to continue to stay above that 2750 line in the S&P.